Have you heard the rumor that a single XRP token could one day be worth $10,000? It's a number that sounds almost unbelievable, a figure that would make even the most optimistic crypto investor pause. Yet this idea has been circulating in online forums, social media threads, and even at major crypto conferences, sparking heated debates and wild speculation. Where did this dream come from, and why does it have such a hold on the imagination of the XRP community? It sounds wild, but it's a theory that's captivated the crypto world. The $10,000 XRP dream isn't just a random number, it's a symbol of what some believe is possible if everything aligns perfectly for the token. Online, you'll find passionate supporters breaking down the math, sharing charts, and debating the likelihood of such a meteoric rise. For many, it's become a rallying point, a vision of what the future could hold if XRP fulfills its boldest promises. The idea is rooted in the belief that XRP could become the main bridge currency for all global cross-border transactions. Imagine a world where every international payment, from massive corporate transfers to everyday remittances, flows through the XRP ledger. In this scenario, XRP wouldn't just be another cryptocurrency, it would be the backbone of a new, frictionless global financial system, connecting banks, businesses, and individuals across every continent. If every major bank and corporation used the XRP ledger to move trillions daily, the total supply would need to be valuable enough to handle those sums. Supporters argue that the sheer scale of global finance, tens of trillions of dollars moving across borders each year, would require each XRP token to be worth far more than it is today. The math, they say, points to a price that could reach the stratosphere, especially if XRP becomes the standard for liquidity and settlement worldwide. Proponents argue that even a fraction of global payment volume could send XRP's price skyrocketing. If just a small percentage of international transactions relied on XRP, the demand could outstrip supply, driving prices higher and higher. This is where the dreamers and the skeptics clash. Some see a once-in-a-lifetime opportunity, while others warn of the risks and challenges that stand in the way. But this scenario relies on a perfect storm: total adoption, regulatory approval, and flawless technology. Every piece of the puzzle would need to fall into place. Governments would have to embrace crypto, banks would need to overhaul their systems, and the XRP ledger would have to prove itself secure and scalable on a global scale. Any misstep, whether it's a regulatory setback or a technical glitch, could derail the dream. The $10,000 dream is a thought experiment, a symbol of ultimate success, not a guaranteed outcome. It's a way for the community to imagine what's possible, to set their sights high, and to fuel ongoing innovation and discussion. But it's also a reminder of the risks and uncertainties that come with betting on the future of money. For many, it's about believing in a technology that could reshape finance. The real value of XRP, some argue, isn't just in its price, but in its potential to make global payments faster, cheaper, and more accessible. Whether or not it ever reaches such dizzying heights, the journey itself is pushing the boundaries of what's possible in the world of digital assets. The debate forces us to ask, what will the future of money look like, and could XRP really be at its center? As the world watches and waits, only time will tell if this bold vision becomes reality, or remains just a dream that inspired a generation of crypto believers. Most crypto price predictions come from financial models, complex frameworks designed to estimate future values based on a mix of data, trends, and educated guesses. These models are essentially mathematical stories built on assumptions about the future, how markets might evolve, how technology could be adopted, and what role a particular cryptocurrency might play in the global economy. For XRP, for example, some models assume it will capture a significant portion of the global remittance market, moving billions of dollars across borders quickly and cheaply. The next step is to estimate the total value of that market, then divide it by the number of XRP tokens in circulation to arrive at a potential price per token. But here's the catch. A model is only as good as its assumptions. If you change even one variable, the entire outcome can shift dramatically. For instance, if adoption is slower than expected, or if regulations become stricter, the predicted price could drop significantly. The famous $10,000 XRP theory, for example, assumes near-total global adoption and seamless integration into the world's financial systems. It also counts on regulatory green lights everywhere, with governments and banks fully embracing the technology. In reality, models are tools for exploring possibilities, not guarantees. They help us imagine what could happen, but they don't predict the future with certainty. The crypto market is famously volatile, shaped by rapid technological change, shifting regulations, and unpredictable investor sentiment. So, when you see bold predictions or eye-popping price targets, always look at the assumptions behind them. Ask yourself, how realistic are these assumptions? Are they grounded in current trends, or are they wishful thinking? What would actually need to happen in the real world for these predictions to come true? Would it require a major shift in technology, regulation, or public perception? By questioning the model and digging into its assumptions, you become a critical thinker, someone who understands the difference between possibility and probability, and who can navigate the crypto world with a clear, informed perspective. The XRP community sees a $10,000 price model as validation, a future where their technology revolutionizes finance. They focus on efficiency, lower costs, and a more connected world. Regulators, though, see risks, stability, control, and the potential for illicit activity. If XRP became central to global finance, regulators would stress test the system for vulnerabilities. It's like building a bridge. The community dreams of what's possible, while regulators test for disaster. Both roles are essential. Dreamers push boundaries. Regulators ensure safety. This tension shapes debates in crypto, especially for projects like XRP. The SEC vs. Ripple lawsuit highlights this clash. Innovation versus enforcement. Understanding both sides is key to seeing XRP's full journey. Liquidity is a fundamental concept in finance, but what does it really mean? At its core, liquidity describes how quickly and easily you can buy or sell an asset, like a stock, cryptocurrency, or even real estate, without causing a significant change in its price. In other words, a highly liquid asset can be traded rapidly, in large amounts, and at stable prices, while an illiquid asset might take longer to sell, and could see its price drop if you try to move it quickly. Take Bitcoin, for example. It's considered highly liquid because millions of people trade it every day on exchanges around the world. You can buy or sell Bitcoin almost instantly, and the price won't change much unless you're moving a huge amount. But what about smaller cryptocurrencies, often called altcoins? These can be much less liquid. If you try to sell a large amount of a little-known altcoin, you might struggle to find buyers, and the price could drop sharply. Now, imagine XRP being used as a global bridge currency for banks and financial institutions. For this to work, XRP would need enormous liquidity, enough for banks to move billions of dollars worth of value across borders, instantly, and without causing wild price swings. If a single large transaction could move the price of XRP significantly, the whole system would break down. Stability is key for any asset aiming to serve as a global settlement tool. Achieving this level of liquidity isn't easy. It requires deep markets, participation from major financial institutions, and seamless cooperation between global exchanges. The more players and volume in the market, the more resilient and liquid it becomes. Ripple's on-demand liquidity, or ODL, is designed to address this challenge. It lets banks and payment providers use XRP to move money across borders instantly, without needing to hold large amounts of XRP on their balance sheets. But scaling ODL to handle trillions of dollars in daily transactions is a massive undertaking. It's not just about technology, it's about building trust, volume, and deep liquidity in the XRP markets. The real question is whether XRP's market can ever become deep and liquid enough to support such a high valuation and global usage. Can it truly handle the demands of the world's financial system? Liquidity isn't just a technical detail. It's the linchpin that determines whether the dream of a global, instant, and stable payment network can ever become reality. Today, crypto theories spread at lightning speed online, on X, Reddit, and YouTube. The $10,000 XRP narrative thrives because bold predictions get more clicks than cautious analysis. Sensational ideas create echo chambers and foster a sense of community among believers. FOMO and confirmation bias amplify the effect. People want to believe in life-changing wealth. But these discussions can also breed misinformation and unrealistic expectations. Rumors become facts, and speculation is treated as certainty. The key: approach online hype with skepticism and seek multiple sources. In crypto, critical thinking is your best defense. To judge the $10,000 dream, separate hype from reality. The XRP ledger is fast, cheap, and scalable, handling transactions in seconds for a fraction of a cent. Ripple has built a network of hundreds of financial partners, some using XRP for real cross-border payments. But the scale is small compared to the trillions moved daily by legacy systems like SWIFT. Adoption is real, but still early stage. The journey from niche solution to global standard is long and uncertain. The technology works, but the leap to total dominance is huge. Progress is steady, but expectations should be grounded in current reality. The truth lies between hype and skepticism. For XRP to reach sky-high prices, everything must align: massive demand, flawless tech, and global regulatory approval. Demand must surge from investors, corporations, and especially banks. The network must handle global payments without fail, no downtime, no hacks. Liquidity, providers and exchanges must support trillions in value moving smoothly. Regulatory clarity is essential. Without it, big institutions won't join in. XRP must also outcompete SWIFT, stablecoins, and central bank digital currencies. It's not enough to be viable. XRP must become the preferred global solution. Only this perfect storm could make the dream a reality. In crypto, separating fact from hype is crucial. Always check the source. Is it official or just an influencer with an agenda? Look for evidence, data, reports, and real adoption, not just bold claims. Beware of guaranteed returns or insider tips. Understand motives. Who benefits if you believe? Follow a range of sources, including skeptics, for a balanced view. Stay curious, do your own research, and ground your excitement in facts. With critical thinking, you can navigate the noise and form your own opinion about XRP's future.